So we'll start with the news, the last concept of your chapter number 2, that is FA 402, audit considerations relating to an entity using service organization. Okay, let us understand, because maybe the language may be a bit tricky as compared to other standards, but once you understand, it's actually very simple. Okay, it's a very nice standard. Now, what is this service organization and what is the audit considerations relating to an entity using service organization? Now, I'll give you an analogy. Let us consider this in the form of this analogy. Like, for example, you wanted to have one Mahashatru Vinasha Yaga. Let us assume. Okay? Shatru Vinasha. All your enemies should get eliminated with this yaga, Mahayajna. Okay, so you want to have this Mahayajna. Now, fine. Now you have got one priest who is going to do this for you. And where you are going to do it? Maybe in your house only you will do it. But since this is a very special, okay, this is a very special type of yajna. If you, this yajna, see, before any yajna or before any auspicious work, what we do? We pray Lord Ganapati. Correct? So you see always beside this yajna, they have kept some rice, coconut, one lamb. See, they are praying to Lord Ganapati that, okay, this yajna, let it happen without any issue and all. But since this is a very Vishishta yajna, you cannot pray ordinarily like this. Let us assume that in Kashi, okay, where you have got Vishwanath temple, there is one Mool Ganapati temple. Okay, this is considered as a Moola Ganapati temple. Like, example, all examples, no reality here. Now, before this yajna is starting, you are supposed to perform one puja here. Now, you see, students, the objective of this yajna is something. You have got an objective. But this objective will be fulfilled only and only if this particular work is completed properly. Like, for example, you will do honestly, you will do, or you follow all the method. But now one problem comes. See, Kashi is very far away from, say, Mangalore. Now there can be another challenge. First thing is, okay, this priest himself may have to go there. Second challenge is, this temple may not allow outsiders. They may have their own, say, set of priests who are going to do the puja there. Now, how does this particular priest, because see, ultimately, if Shatru Vinasha do not happen, now whose neck you are going to catch? You are going to catch this person's neck. You say, so you made me to spend so much money, but see, still all my enemies are roaming in front of my eyes. What happened to them? Nothing. Now, what is your problem? See, you have done your job properly. Okay, but you have got a dependency on some entity outside your organization, which may not be, where you may not be able to go, or you may not be able to send your assistant there, where they have got a practice of doing their own priest there. Like, your work has got this work has got a dependency on you. Now, my only simple question to you, you take the step into the shoes of that priest now. You are that priest, let us assume. How do you get that reasonable assurance, not absolute assurance, that whatever activities which were required to be performed, which you suggested or which you required, has been done here properly at this particular location? Same analogy, same concepts of the principles applies here, students. You are the auditor of the financial statement. Okay. Now, there is one problem. Some of the components of the financial statement may not have generated by this entity. This is the client. So that means these components have not come through this entity. Instead, what they might have done, they might have outsourced some activities or the business processes of the organization to some organization. Like, you also must have seen in audit office, a lot of outsourcing you do. Like, you have done some processes outsourcing, client's processes you are doing in the office, like the GST compliance and other things, maybe maintenance of books of accounts, and Baba, that is their responsibility. Now, why they do it? They can do it because of the two reasons. One, they can do because they don't have a staff, or it can be cost effective. So outsourcing is going to create a risk now, because some processes are not within your control. It is happening somewhere far away. But it may reduce the risk also, because in-house you don't have a qualified people, but outside they may have a better qualified people. So whatever it is, now certain components are coming outside the organization. That means, see what happened, you start with the SA315, you start with SA300, because 200 principles talk about the responsibilities, like responsibility towards fraud, internal control weakness, communication with the TCWG, you as a joint auditor. So all 200 series speak about the responsibility, but they don't speak about the audit. Now 300 onwards starts with the audit. Like you plan your audit, you strategize, okay, you decide what to do, how to do, whatever. Now you go to the workplace of the client, SA315. The very first thing, you try to understand entity, environment and the internal control. So when you understand this entity, environment and the internal control, suddenly you figure out that certain components of the financial statements are coming not through the internal controls of the organization, but through internal controls of some other organization, which is not located in this place, or maybe located next to the same office. That doesn't matter. Location doesn't matter, students. Now, okay, after 315, then you have to identify the risk. As part of this, after understanding entity and environment, you have to identify the risk. And after identifying, you have to assess the risk. Assess means overall level, assertion level. Now, your focus is on the assertion level risk, because you can decide nature, timing, extent of further audit procedure. Further audit procedure includes your test of controls or substantive procedure. Now, which one you will choose, that comes in SA. Okay, now you in between you fix your called 320, you fix your materiality, and then at the 330 level you will choose your further audit procedures or response. Okay, now when we talk about response, there can be two responses, TOC or substantive procedure. See, now first question comes, whatever I want to test the controls, will you be able to go to this organization? If this is the only, this organization is called a service organization. If this service organization is giving service only to your client, we call it user entity. Then they may permit it, like godown is there, they have kept your stock there. So you wanted to inspect that stock. Those godown people, it's a third party godown, but they will permit you to verify the stock. But what if this service organization is giving service to different other entities? Will they permit your? Then they will become mad. One fine day you will go, second day another entity or statutory auditor will go, third day another person will go. So 365 different auditors will come, and everybody you have to explain the internal control, the organization, the risks and all. So that's why they may not agree for this type of arrangement, where sometimes they may permit, if depending upon what type of client your client is, what type of clients they have got. Like Reliance Industries is the client, then they may permit because it's a big client. But if you are somebody, if your client is a small client to that service organization, they may not permit. So how do I test the control? How do I understand the control? See, primarily in 315 you try to understand the control. In 330 you try to test the controls, if you feel that it is good. Okay, now what to do now? If you are permitted, well and good, that means this entity becomes part of this organization. It makes no difference to you. But if you are not permitted, or if you cannot send your person, then there is one process, okay, which are followed across the world. That is called one service auditor report. And there are two types of report called type 1 report, type 2 report. Now, type 1 report will tell what? It will tell the design of the internal controls and its implementation. Why do we need this type 1 report here? Because when we are trying to understand the internal controls of the organization, what is that we understand? We understand only the design of the control and its implementation. So if your objective is just to study the design of the control, like what type of control this organization has established, because if there is a control deficiency, material misstatement may come through their organization, and it can hit your financial statement. Like if this puja has to be done, so this particular temple has to give an assurance. Okay, like what type of priest they are appointing, what formalities they follow. Like for example, you may require the priest to get up early morning 3 o'clock and do perform, but their practice is getting up to only at 5 o'clock. They may say we don't get up. If that is not matching, then you have got a big problem in this work, no? So what type of internal controls you expect, they may not have. Then you may decide not to do test of controls. Then you may decide to shift yourself. You may have to decide to perform alternative procedure, or you may give a disclaimer of opinion to them. They say, look, sir, this is how I want the puja to happen, but they are not performing, so I cannot proceed with the puja. So you will give disclaimer. Whatever. So many conclusions you can do, decisions you can take only after understanding. Simply before you cannot understand, you cannot take a decision. Now, what is your type 2 report? Type 2 report talks about the effective operation. That means if you want to perform test of controls, you are going to test the effectiveness of the internal controls, whether it is operating throughout the period. Now, type 2 report will be talking about the effectiveness. Now, this is costly. This is cheaper. So, if your client is willing to pay more money, they will give you this type of report, because this is also an independent service auditors report. SAE 3402, we are going to learn later. But this is a simple work. That's why it is not going to cost. So, when you have gone to an organization and suddenly you realize that this organization has outsourced some processes, it is going to cause a problem for your audit students. Please understand. Because some of the components you may not get the direct evidences. The records may be maintained at that location. The processes are happening at that location. Controls are operating at that location. So, how do you perform audit? And at the end, how do you get that reasonable assurance that this financial statement item is free from material misstatement, or it is true and fair? How do you get that assurance? For this we have got the stamp. SA 402. Okay, so for now, I hope you are clear with this concept of outsourcing. We have to understand certain set of terminologies. First thing is, who is service organization? This is the service organization which is doing that outsourced work. It can be any type of outsourcing. Okay, that particular entity is called a service organization. Second, user entity. Who is user entity? Your client is the user entity. Third question comes, who is the service auditor? The auditor, the independent auditor, who has been appointed by this service organization to understand and study the internal controls only. See, please understand, students, even this service organization has got two auditors. One, their statutory auditor, who are going to audit their financial statement as per the Companies Act, and the special service auditor, who was specifically appointed to give this type 1 or type 2 report. On whose request? On your client's request or your user entity's request. That's why they have to pay additional money. So this service auditor is not going to audit financial statements. Service auditor is not going to audit the financial statement. They are going to audit the internal controls which are prevailing at the service organization, and they are going to just give a report there. Like, what type of controls are there? What is their quality control system? Have they put appropriate internal controls to address the risk? Then we have got, okay, service entity auditor. Then we have got a type 1 report. So what is the type 1 report? Which describe what all the internal controls, and they say what is the risk and what is the design of the risk plus implementation of the risk on a particular date. Now, why this report is helpful? It will help you to understand, okay, what type of internal controls are there. Simple, students. I can give you something example like this. See, today I am sitting here. You are sitting in a very far away place. Now I am interested to know what exactly you are doing whole day. Now can I come to your house and observe you? Sit and watch what you are doing from morning till evening. Are you watching mobile, or are you spending time on some other thing? But for me, your internal controls are very important. Your discipline is very important wherever you are sitting. Now, for me, it is not practical to go here. I can give another analogy. Now, what I can do now? Okay, maybe I'm looking for some type of assurance report from someone who is much independent. Who is that? Like maybe your parents. Okay, I hope they are truly interested in your success. Or okay, anybody who is your close. Everybody has got a circle, right? In that circle, some people are there who is really interested in your success. Now, I can trust them. Now, I will ask a report from them. Okay, please tell me what exactly that kid is doing, what you exactly you are doing. Now, please understand, friend, there can be two types of expectation. Now, first thing I want to know, like you are not figuring out your own strategy because you have come to me, I am giving some strategy to you, and you are implementing that strategy. I hope you don't figure out your own strategy there. You have, because see, this is the problem happens because strategic management says strategy should be good, plus it should be effectively implemented. So I'm giving you some strategy. So now what the parents may say, one thing is, yes, they have implemented the strategy what you have suggested, and I can see those books and works which is happening here. It's not simply happening in the theory. I could, when I went to their room, okay, I could see that they are preparing homework, okay, they are taking the test, okay. But please, they will give me one disclaimer. Look, sir, this particular instance is only when I went on that particular day in there. It is on a surprise day. Suddenly I told, okay, sir, madam, sir, please go and check today what your kid is doing. They said that, okay, the day I went there, this is what they have been doing. Now, at least now I got some assurance. Before that, I didn't have any assurance on me. Absolutely, I'm in total darkness. But when some independent person tells me that this is what you're doing in such a so and so day, something is better than nothing, no? I got assurance. But based on that assurance, can I form an opinion on you? Can I decide how many tests to do? Because the moment I figure out that you have been doing homework, you are doing tests and all, will it reduce the number of tests? I need not ask you to take retests. But if your controls are weak, okay, the moment I figure out the controls are weak, I have to perform more substantive tests now. I have to ask, give me second test, give me third test. Say, for example. Now, alternatively, I see the control what have existed on say day 2 or day 1. I want this control to exist up to day 60. Okay, now the problem comes if I tell now your parents says, look, Baba, you asked me that one day, that's fine, I did it. But doing it regularly or often, it's going to consume my more time now. Because every time I have to go and check what they are doing. Because, okay, initial, like a New Year resolution, initial days, fantastic, excellent implementation. But later part, it might have gone down. Then that is no fun for me, no use for me. Now, if they can give me a report from time to time, like every week on a random day they check. So like this, over a period of 60 days, if they can give me that, okay, Baba, this is what happened over the period of 60 days. This is called type 2 report. This is called type 1 report. I hope this is clear, students. What is type 1, type 2? So primarily they are internal control related things, not related to the financial statement. Then we have got another terminology. The terminology is called complementary user controls. See, they are user control. That means these controls are not operating at the service organization level. They are operating at the my level. Like say, for example, if I consider I am the financial statement, you are the service organization because you are located far away. See, complementary means what? Additional. We say no, complimentary breakfast with stay. That means stay is primary, your breakfast is complementary. So your preparation is primary. But what is complementary to it? Certain controls operating at my level. Like for example, I am monitoring your attendance, which I will share after this chapter is done. No, I will share your attendance. you see where exactly you stand. Now, see, this preparation becomes more effective if certain controls operate at my level. So I can bring that seriousness to you, whatever. By looking at some reports, you say, okay, this is what I should be doing, this is where I should be improving. So service organization must have expecting the user entity to put control, because every data goes from here. Okay, so now if these controls are not effective, this control may not be effective. Like, how did I design the Q&A? You expect that I take the Q&A from ICI material only. Ulta, I am using my chat GPT and designing Q&A and handing over to you. See, that may not be effective for your preparation, because that is much generic. ICI, RTP, MTP, study material questions are more objective oriented. Like, it can help you to face the objective. Generic, like I take US CPA examples, Bangladesh, the chartered accountancy examination questions and all, if I hand over to you, that may not be effective. So I need to have at least certain set of controls to give you something proper. So complementary user controls are, see, the name itself suggests the user controls which are operating at the user entity level. Like, for example, if this is HR outsourcing, they say that your monthly attendance data, see, our monthly attendance data becomes input to this HR outsourcing. What if somebody has manipulated that monthly attendance only? Otherwise, they may say, look, sir, before you send this monthly attendance, you have to put the signature of a CFO. Plus, you have to encrypt this document using this technology and send it to this particular mail only. Like this type of controls, like putting signature of a CFO, doing that encryption, this particular type of control are called the complementary user control. And there are certain things called the user controls, which they didn't discuss. What is this user control? Let me see. Okay, I can see attendance, I can bring it as a user control. User control. Complementary user controls means if your controls has to operate effectively, my control should be good. It is a prerequisite. But user controls are independent controls, which user themselves might have done. Like when you are outsourcing this HR, they also must be doing some rough calculations, right? So that when you tell this much payroll has to happen, you cross verify with your data. Now these controls are called user controls, and the last element is called sub-service organization. Okay, name itself service. This is an service organization, but it is sub-service organization. That means you have outsourced to, say, A Limited, and A has outsourced some of the components to, say, B Limited. So this becomes your sub-service organization. So in case of a sub-service organization, you have to get again type 1, type 2 report. Now what could have happened? Instead of getting 2 type 1 reports or 2 type 2 reports from A Limited and B Limited, the A Limited service auditor who is issuing you type 1 or type 2 report may include sub-service organization's controls also. This is called the inclusion method. So if your type 1, type 2 report do not have sub-service organization thing, it's called a carve out method. Okay, these are all the terminologies you have to remember, understand, use in the examination, because these are all the same terminology people across the world in our profession are using. Every single student of our profession is learning and understanding. You need to practice. Clarity, please ask me. Okay, now let us go and see in the study material, since we have understood these concepts. Only thing, we don't know now what we are supposed to do. We know now, okay, who is a service auditor, what is service organization, what is that type 1, type 2 report. And for you, I'll just show you. See, this is called a Morgan Stanley type 2 report. This is a type 2 report. Now, Morgan Stanley is a service organization which is taking outsourcing. What type of work? Some management custody services related to technology. Okay, maybe intellectual property or something. They are protecting something they are doing. You see, it will be looking like this. Statement by the service organization. That means this service organization, and who is the address to whom this is given to? This is given to the user entity. First thing, they will have a statement by the service organization. It's more like an assertion. They are telling what exactly are their controls and all. Okay, a statement like who are they. Second, description of the system by the service organization. It's more like an assertion. Now comes independent service auditors assurance report as per SAE 3402. On the report description, their design, if it is full stop here, we would have called it type 1 report. But since they said and operating effectiveness, we will call it type 2. So if you have type 2, then type 1 not required, because type 1 is already part of type 2. So up to here it is type 1, but if you add operating effectiveness, it is type 2. They will have what type of work they have performed, overview of this independent auditor's work, and what is the result, test of design, implementation, and the effective. Before we see this, how it looks like, okay, let us go back to the study material and try to understand. Okay, so now first thing, I hope this part is very clear. SAE 402 deals with the user auditor's responsibility. Who is user auditor? The one who is auditing the financial statement of, that means you, independent auditor. So what he is supposed to obtain? That is the main priest. He has to obtain sufficient appropriate evidence when a user entity uses services of one or more service organization. That means it could be one organization, one outsourcing you could have done, or multiple outsourcing you could have done. It expands on how user entity applies 315 and 330. How do you apply this 315 and 330 now? In this context, you have to understand, in obtaining understanding of the entity, including the internal controls, so as to you can identify and attest the risk of misstatement, and then you perform further audit procedures. Means, why you are doing? You are going to identify the risk and assess the risk, and then you are going to choose the further audit procedure. Now, they have given you in the form of a picture. What is service organization? It is a third party organization. It is not you. It can be a segment or a third party organization that provides services to the user entity that are part of entity's information systems relevant to financial reporting. Now question, see, now when you call it as a service organization, see, this particular entity, this is your user entity. They might have outsourced so many things. Like for example, they must have outsourced the, what is it called, housekeeping. They must have outsourced security. They must have outsourced the customer complaints. They must have outsourced the website in a cloud. They are not maintaining. In a cloud, they are maintaining. Now, so many activities they could have outsourced. Like in your house also, you see, no? Have you not outsourced the cooking, say, for example, ironing, security, somebody comes and delivers the milk and the paper. Okay, these are all the outsourcing you would have done. Like in your house, this also must have happened. Now, am I concerned with what type of outsourcing is happening there in your house? No, I am concerned with only that activity, what you are exactly doing right now in your house. Say for example, that's the only thing I am concerned with. So, when outsourcing, there are so many activities could have been outsourced to different service organizations. Now, which is relevant to me? See, since I am the auditor of the financial statement, concerned with the financial statement information system relevant to financial reporting. That means if these outsourcing jobs are going to affect my financial reporting, that means capturing of the data, processing of the data, journal entries, reporting, then only they will come under my focus. Otherwise, I will ignore them. I don't classify them as a service organization. Like outsourcing you have maintained. Okay, there is an housekeeping you have been outsourced client. Will you go and check what is the qualification of the people who comes to sweep? Okay, how do you select them? Further, you as an auditor, you ignore it. Followed, right? Okay, now what is the criteria whether housekeeping should be part or housekeeping should not be part, security should be part or it should not be part. We will see that. For time being, you have to understand, you are concerned only from the financial reporting perspective. Every outsourcing, you are not going to focus there. Now, who is user entity that is using the service of the service organization? Now, who is the service auditor? Service auditor who at the request of the service organization, like for example, Morgan Stanley requested, who is our service auditor here? Deloitte. Now, are they doing the financial statement audit of Morgan Stanley? No. Morgan Stanley's financial statement must be done by somebody else. Will they give that audit report to you? They may give, but it is not relevant to you. Now, they provide that assurance report as per SAE 3402 on the controls of the service organization. Now, who is the user auditor? Is the auditor who audits and reports the financial statement of the entity. Now, many entities outsource their aspects of the business, ranging from tax direction of the entity. You might have outsourced the legal department, strategic thing, marketing. Okay, many of the services provided are integral to the entity's business operation. Yes, obviously. Please understand. Every activity could have been very integral to the entity's business operations, like marketing. They must have outsourced to some digital marketing agency. Is it integral? Yes, it is integral. Security, they must have outsourced to some security. Is it integral part of the operations? Obviously. Okay. Procurement only might have outsourced. Payments could have been outsourced. Customer complaints and refund could have been outsourced. But every activity what they outsource, no, they may form the integral part of the operation, but not all are relevant to your audit. Okay. In SA 315 you have learned, when we talk about the internal controls at the intermediate, you must have learned, when you are trying to understand the internal control, an organization will establish the internal control for operations, compliance with the law, safeguarding of the asset, and your financial reporting process. Now, is everything relevant for you? And this is called IFC, internal financial control. But when you are trying to report, you are reporting on IFCFR, not IFC, internal financial control on financial reporting. Or you can also call ICFR, internal control over financial reporting. So, generally, this is relevant. Generally, these are all not relevant. But occasionally or circumstantially, some of this may be relevant for your financial reporting and certain may not be relevant here. This is what you have learned at the internal level. So, all the outsourcing are required for a business. What is business? Cash. To earn cash you require, but to have they may not have an accounting impact, or their impact may be very low. So when the service auditor provided by a service organization are relevant to the user entity's financial reporting system, one of the very important questions. Okay, so you have to mark this important because these questions can come for the exam. So they are relevant to your audit of entity's financial statement when those services and controls are part of the user entity's information system. You see, students, when we talk about the components of the internal control, we had got 5 components: control environment, risk assessment process, control activities, monitoring, and information and communication system. And we had learned that these are all the 5 components which is required, which an auditor has to understand when you are doing SA 315. When we talk about understanding of the internal control. See, some of the processing internal controls operate outside. They are relevant only if it is part of the entity's information system, including business processes relevant to financial reporting. That means if this information system is going to affect your financial statement, then only this control becomes relevant to you. I hope this part is clear. Now, how to identify? What are the factors to consider? So most of the controls are likely to report financial reporting. Okay. There may be other controls that may be relevant to audit, such as control over safeguarding of it. Okay. Now, please mark it important. How a service organization services are part of the user entity's information system, including processes relevant to financial reporting when it's going to affect the following: the classes of transaction in the entity's operation that are significant to the financial statement. Now, what do you mean by class of transaction? So, class of transactions means P&L item. Now, these are all, you have purchases, you have got housekeeping, you have got security, you have got sales. Now, if this purchases, whatever numbers you see here, is it coming out directly from that outsourcing entity? If answer is yes. The second question comes, is it significant? Answer is yes, then it becomes relevant to you. Like for example, security services. Is it relevant to you? Okay. Generally, what is the security cost? Very small amount. No. But imagine your user entity has got something called a Kohinoor diamond, very costly. So if you have a Kohinoor diamond, okay, then in your P&L, you will see one very big item called a security cost. Now, you may not have an internal expertise to protect, to have the security. So what you must have done, you must have outsourced this security to one very famous organization, okay, who will safeguard this from the thieves. Now that, since your value of the asset, you wanted to safeguard the asset, see, you wanted to safeguard the assets. Now you will incur huge amount of security cost. So this security cost is the class of transaction which is very significant. Now this item may become, this security outsourcing might become very relevant. Why? Because tomorrow one of the person can come in the form of security and steal this asset. No. That's why auditor will include this security outsourcing, like what is that security, how they will appoint the security personnel, how do they train them, what is that information system they have got, what are the modern technologies, encryption, and they have appointed, because the security is provided by them. So now this becomes more relevant for you. Why? Because it is a big class of transaction and it is in the balance sheet also, your financial statement item asset Kohinoor diamond is getting affected. So class of transaction significant. Okay, you can say significant, affecting significant class of transaction. Second, procedures within IT or manual system, that it could have been a manual or IT, by which the entity's transactions are initiated, recorded, processed, corrected, transferred to the general ledger and reported in the financial statement. Okay, if you see today's students, once upon a time, my first order for my book, I purchased Barat for my intermediate to study law. Now I had to go to the bank, take one DD, send a courier to the Taxman Publications Limited, and they couriered me that Barat. This is my first book purchase through e-commerce way, I can say, okay, online way. But such a lengthy process. But today, if you see, this is the ERP system of the client. They have got a website. Now, client logs into the website. They will add to the cart, make the payment through Razor Pay, and automatically the amount will get credited to the bank account of this particular company. And from here, accounting entry is going to happen in the ERP system. Now, you see the way the information technology has been used. The way, who is initiating now? Customer is initiating. Previously, who was initiating in the Taxman? The employee looking at the DD used to pass the journal entry using his human fingers. Today, customers are using their human fingers to select the cart and items, the rate and all of this stuff. And information technology is processing that data and passing the accounting entries in the system. Now, you could have had this particular server in your organization only, then service organization do not come into picture. But this server, they are outsourced, okay, the server in which you have hosted the website or the Razor Pay technology, these are all sitting outside the organization. Yes, this becomes relevant for you because they are the procedures by which the transactions are initiated, recorded, processed, corrected and affecting to the general ledger of the financial statement. Now, related accounting records supporting information and specific accounts in the user entity's financial statement used to initiate, record and process the report entity's transactions. That means the records are getting generated somewhere else. For example, I can give you one more example. This is your service organ, this is your user entity. They have got a stock which is located in one warehouse. Now, this warehouse is independently managed by someone. Now, your service entity gives only instruction. Baba, please supply this material to them, please supply material to them, please receive this material from so and so supplier. So, all the GRN, delivery challenge, GSTN, e-way bills, these are all the very important documents, supporting documents for your financial statement items. Like you have got inventory. That inventory value is coming through the GRN, okay, and the delivery notes created. You have got the taxation, GST, that GST is coming through the e-way related transaction. If you see, all the accounting records are getting generated outside the organization. Now, is it relevant for you? Yes, this service organization becomes relevant because accounting records supporting information, you can ignore this. Accounting records supporting information and accounts in the user entity statement are used to initiate, record and process and report the user entity's transactions. That means these accounting records are used to initiate, record entity's transaction. That means these records have been created outside. Now, how the entity's information system captures events and conditions other than transactions that are significant to the financial statement. Now, this time we are not going to talk about the transaction. Say GRN is a transaction, delivery challenge is a transaction, purchase is a transaction, okay, payment is a transaction. Now, somebody has filed a complaint against you. You got a court notice. What is the very first thing you do? Will you go to the court alone? No, immediately you go and talk to a lawyer. Now, lawyer is more like an outsourcing. So, this entity might have outsourced their law related issues to a lawyer. So, what lawyer will do? Lawyer will identify the non-compliances, they will take address, they will go to the court, they will represent you. Now, is this relevant to you? Yes. Why? Because ultimately, whatever activities are happening here is going to impact the provisions and the disclosures which you are supposed to make in the financial statement. That's why they say, how your system captures events and conditions like non-compliances, that is significant to the financial statement in terms of provisions and disclosures, then it becomes relevant to you. Now, financial reporting process used to prepare the user entity's financial statement, including estimates and the disclosures. Like for example, in FR, in Ind AS 19, you must have come across two elements called defined benefit plans and defined contribution plans. Defined contribution is very simple and straightforward. You pay money, matter is closed. You pass the entry, expense account debit to cash. But in case of a defined benefit plan, you have agreed to give retirement benefit only 40 years from now for the services given right now. So you are supposed to make one provision entry, the expenses account debit to defined benefit obligations. Okay, you are aware about this. Now, fine, this is a very simple entry, salary expense to defined benefit obligation, but at what value I should make this amount? Now, will that person going to stay with us for next 40 years? What will be his salary at the time of his retirement? What if he is going to die in between? See, there are so many complexities involved, students, in the amount in which you have to make a provision. It is not that you will not make a provision. You have to make a provision to have a matching concept. But who is going to tell you this amount now? You might have been approached one actuary. Now, what this actuary do? He will collect so many information from you, do some calculations and all, and he will give one report and say, look, Baba, you pass one provision entry for so much amount. Okay, is that actuary's working process relevant to you? Answer is yes. Why? Because they help you in making estimates and certain set of disclosures. Now, controls surrounding journal entries, including non-standard journal entries, used to record recurring Non-recurring unusual transactions. Okay, what is standard now? Let us understand. What is standard journal entry and what is non-standard? See, standard means it regularly comes through the same set of, you can anticipate it. That is standard. Like what you will do every day. You know that. Okay, you sit and study. On occasional thing, something happens, you have to do certain things which is not your routine, like sales transactions, purchase transactions, salary expense, your maintenance, your rent. You can all call standard journal entries because they are coming through the same standard. But if you talk about some non-standard entries like impairment, they are not standard entries. Year-end inventory valuation, because your inventory is like you have got a natural gas inside the, or like you may have to hire a third party who will do assess the what is the stock of natural gas you have got. They will give some estimate. Your defined benefit obligation, this is also one of the non-standard journal entry because this happens only at the end of the year. Now, who is helping you in finalizing these non-standard entries? Who is helping you to do that calculation? So controls around non-standard entries for non-recurring unusual transactions and adjustment. If any third party is helping you, if their service organization becomes relevant to you. Yes, so these are all the 6 cases. Mark it very, very, very important. They are going to ask you this. And this you have to write and practice. When you study also, you see the language here. So primarily certain keywords should come. But I hope you have understood what they are trying to communicate here. Okay, so what we will do now, before we move on to the objective, we will make a note. Okay, so we'll start objective. Yeah, just 1 minute. We'll take one water break. Here you can write concept 5, service organization. Okay, so we need not talk about what is service organization, who is service auditor, okay, who is user entity. Now we have to talk about only one element. When service, this is the concept we need to talk of, SO becomes relevant. When service of service organization becomes relevant. Okay, when it is relevant, when they affect. Okay, what are the points? 1, significant class of transactions. That means they are going to affect the amount which is very significant in the P&L account, the balance sheet. When they affect procedures of initiating, recording, processing, of transaction, and its reporting. Okay, in a simple language we will write. So when it's going to affect the significant class of transaction, service becomes relevant. or it is going to affect the procedures of initiating, recording, processing of transaction, and that transactions reporting, it becomes relevant. It affects the accounting records. It is going to affect the accounting records. I can say accounting records includes your the supporting information also. Used to initiate record, process, and report transactions. When it affect how entity information system IS capture event or conditions. How do they capture events and conditions? Fifth, it affect financial reporting process of making estimates and disclosures. So you can give examples here. Significant class of transactions means say purchases outsourcing. You can write somewhere purchase outsourcing, website outsourcing, warehouse, third party warehouse, legal outsourcing, actuary. It affects controls surrounding non-standard journal entry. Okay, only 6-1. Okay, so here you can give examples of say inventory valuation, which may happen at the end. See, you have got coal stack. So how do they do that inventory valuation? Whatever, non-standard entries. Or how do somebody will assess the impairment? Yeah, please mark it very important because I have not seen any questions they have asked on this particular thing in the final till now. So for me, this is more like a time bomb. This particular para is more like a time bomb. In any attempt, they may ask you. Okay, so I hope it's done. Yes, now we'll go to the objective of auditor as per SA 402. They said this is in line with SA 315 and 330, right? So what is your objective of 315? Obtaining understanding of the environment entity and the environment and the internal control. Why? To identify SS and ROM. So here your objective is to obtain the understanding of nature and significance of the services. What type of services provided by the organization and what is the importance, the value of that? Because it may not be, it may be a very small amount. You ignore it. It's not part because you don't feel the risk. But if it's something very important and very complicated, yes, it becomes part of your service, your audit. Now, you have to obtain an understanding of nature and significance of the services and their effect on the entity's internal controls, which is relevant to audit. Why? Identify and assess the RO element. Assess means whether that control at the overall level, risk is at the overall level or assertion level. Okay, after doing this, that means this is something like 315 you are doing. So what you do, since you have to understand the impact, you have to understand the internal controls also. How do you understand? Here you can use type 1 report. Second, once you have understood, then you can make a choice. Okay, if you see that controls are very good, you may design and perform audit procedure in response. What is that? Further audit procedures. There are two types of further audit procedure, test of controls and substantive procedure. If you feel that controls are really effective, you can perform test of controls. For this, you need to type 2 report. Otherwise, you can perform the substantive procedures. This is the objective of SA 402. Now, what is type 1 and type 2 report? We discussed also previously, but we will go through the definition again. See the language which they have used here. You have to practice this. Type 1 report, it is a report on the description, design of controls at the service organization. So the type 1 report includes a description prepared by the management of the service organization, of the service organization's systems. So first they will explain who are we, what type of service we provide, what is our organization structure, okay, what is our mission, vision, business values. Okay, since they are okay, this first thing you will understand who that service organization is all about. Now, what is our control objective? Control objective means, see, first of all, why do we have a control? Because we want to prevent a risk. And what is the first thing you want to do with the risk? Prevent the risk. Okay, if not prevent the risk, detect the risk or not, correct, PDC. So, what is that you are trying to do here? Because this is called a control objective. Do you want to prevent the risk? Do you want to detect the risk? Or do you want to correct the risk? So, what exactly you want? This is called a control objective. Why do a control exist? Like for example, you have put a CCTV in your house. Why you have put CCTV? Is it because you have got extra money? No. You feel that there is some risk. Okay. What is the control objective of CCTV? Is it going to prevent that risk? No, it's going to detect the risk. Now, instead of CCTV, you have to make a choice now. Instead of CCTV, you can go for a dog, lapdogger or whichever, German Shepherd dog. Now, what is the control objective of having a dog? It is going to prevent also, it is going to detect also. And if you let it free, it will correct also. What is that your objective? You want intruders not to enter. See, this is the way you design it. Or you have got an Elron system, okay, inside, that is, it's going to detect it. It will send one auto message for you, it's going to give and take corrective actions, or it will automatically lock the doors, it will close this particular almirah which has got a diamond, whatever. So what is the objective of putting the control? So they are going to describe that, and what type of controls they have been designed and implemented at a specific date. On this day, what type of control they have done? Who? This is management. Their description. It's more like their assertions. They tell, like, this is our objective, this type of controls are done. Like if I ask you what you're doing, then you start explaining who are you. Then you start explaining, look sir, this is me, this is my attempt, this is what I'm doing, this is my objective of putting, this is why I'm reading, this is why I'm writing. See, these are called control objectives. Now comes a report by the service auditor. Who is your service, for me, service auditor? Say for example your parents are your service auditor. Now what is that report they will give me? A report by the service auditor with the object of conveying a reasonable assurance to a service, okay, to a user entity, that includes service auditor's opinion on the description of the service organization. Okay, since they explained service organization system, okay, I can give one more example. What is the description of the system? Like for example, your parents want you to join one, say, coaching organization or college or an institution. Now, is it an outsourcing? Yes, because you are going to school is an outsourcing, right? But parents cannot teach you. That's why they put you in the school. It's an outsourcing. Now, when you have outsourced, you have a process, like you have given your kid, you have made them to join to a school. They will make some claims. They say experienced faculties. You know what happens, friends? Very fantastic scheme also. They say, okay, in IAS training and all, some institute says, okay, experienced faculty, and 1.5 hours they will make one speech about that experienced faculty. So the moment you listen to them, no, you get into it. But after you go through and join that institute, you realize that experienced faculty will come only one day and speak, and rest of the, say, 2 months, all non-experienced faculty will teach. See, this is not the operating effectively. No, they describe, or they said experienced faculty, but they don't have experienced faculty. This is a wrong description. They cannot describe something like that. Service organization systems. Now, control objectives, they will talk, okay, is this control objective very relevant? Like for example, you say control objective is to prevent, but you have put CCTV. No, CCTV can never prevent it. And the relevant controls and their suitability for the design of the control to achieve the control objective. Okay, if you have put a CCTV and your objective is to prevent, will CCTV really prevent it? No. You have put a dog. Is this dog effectively prevent it? Yes. So, is it suitable? What you have described is proper. And what controls you have put, is it suitable for what you are talking? You said experienced faculty, but this experienced faculty is in a biology. What they said is correct. They have given you experienced faculty, but is the biology experienced faculty? What they are going to do with the chemistry? Now you say, yes, experienced faculty, correct. The description of the system is correct. Control objective is to get better marks in chemistry. But the control what they have given, that experienced biology faculty is not suitable for your chemistry. Somewhere they are going to give the opinion. Then, what is your type to report? And this is on a particular date, on a specified date. This report will be on one particular date. Now, what is your type to report? Type to report is ditto copy of type 1 report with regard to its description, design, and additional thing they have got operating. So, first thing, they will have a description prepared by the management. You see, same para. Description prepared by the management of the service organization, a system, control objective, and the related controls in the design and implementation at a specific date. Since it is type 2, throughout the period and effectiveness throughout the period. That means they not only tell that what type of control they have put, they say that this faculty is not only there for one day, this faculty will be there throughout, say, 3 months. Who the service organization makes the claim. In the first case, they said this faculty will be there only for one day. They have made. But is it okay? Is it correct? Or they might have told this faculty will be there for 3 months. Is it correct on that day? Now, a report by the service auditor with the object of conveying reasonable assurance, the service auditor's opinion about the system, objective, related control, and suitability, plus the effectiveness of the control. And since we are talking about the operating effectiveness, the test results also. You see, this is your test results. They have given you the test results. They have given the opinion here and they said what work was performed and what results they have got. So these three is called type 2 report. Okay, now let us talk about the requirements. Okay, let us try to write what is type 1 and type 2 because it is bit technical. So we may have to write what is type 1 and type 2 report. The service entity, all those things we need not write. Now type 1 report. The report that comprise one, I can say on a specific date, description of SO system description of control objective and related control. Okay, so this is what it contains. On a specific date, the description of the service organization system, and what is the description of the control objective and the related controls which has been designed and implemented. Then report by service auditor. Okay, what is that report? One, opinion on description of SO system, control objective, and related controls. What they have told here, is this true and fair? And one thing, suitability. What they have told above, is this true and fair? And is it suitable? Like they said, we have got 10-year experienced faculty. Is that a faculty really having experience of 10 years? Yes, that's correct. But faculty is a biology faculty. What they have to do with the chemistry? That's a suitability now. Suitability of controls to achieve control objective. So what is your control objective? You wanted to achieve say 100 marks in physics. So learning from a biology faculty will help you to achieve? Answer maybe no. They express that opinion here. I hope it's clear, students. Okay, but see, you cannot write like this. You practice writing what they have given in the material. So this is your type 1 report. Now you have to go to type 2 report. Report that comprise, you can write the same thing. One, on a specific date or throughout the period. This is additional. And this is or the design can be on a date or throughout the period, but very important, and operating, okay, effectiveness throughout. On a specific date or throughout the period, and operative effectiveness throughout a period. Okay, what do we have? Same thing we can write here. Description of the service organization system. Description of control objective and related controls. Yeah, that's it. Description of related controls. One minute. Okay, so we'll continue. Description and the related controls. Okay, now report by the service auditor. Point number 2. We'll write in line with the same thing. Report by service auditor. What is that report? 1. Opinion. On. Okay, we can write the same. Description of SO system. Control objective and related controls. Second, suitability of control to achieve control objective. Okay, third, okay, and so here we have got one extra. Operating effectiveness of controls. This is one extra. We don't not only speak about the suitability, but whether it is operating effectively. And the third one, description of test and results. If I take you here, this is called overview of the work performed, description of the test, and this is results. Control objective, control activities, design, implementation, effectiveness. Okay, so now what are the requirements? We will note down the requirements, then we can have a break. what are the requirements of this particular standard, how to achieve this objective, and what is your, okay, I think we have not written the objective. Have we written the objective? No, we wrote about why service is relevant, what do you mean by type 1 and type 2 report. Okay, now comes question, what is the objective of SA 402? One, the objective is to identify and assess ROMM. How? By obtaining understanding of service by service organization and their effect on internal controls relevant to audit. Okay, we can reframe it like this. The objective is to identify and assess the ROMM. This is the key. How do you identify and assess the ROMM? By understanding the entity and the environment, that is the service organization's nature of work and the significance of the work, and internal controls and their effect on the internal controls of the entity relevant to audit. And second, design and perform audit procedures in response to those risks. That's it. So we'll have a very brief overview of how to achieve the objective now. Okay, we know now we have to identify the risk and we have to frame our response. But how do we achieve this? What is our responsibility? What we are supposed to do? What is your requirement? What is that you are supposed to do? What is your responsibility? One, obtain understanding of service. If your objective is to identify the risk, first you obtain the understanding. Question comes, how do I get the understanding? We'll see that. There are some requirements. Okay, once you once you have obtained understanding and you have done the risk assessment. Okay, do we have the risk assessment also covered here? Second, respond to the risk. That means when you have obtained understanding, it is understood that we have done it with the view to identify and assess the risk. Now you have to respond to the risk. The third one, okay, response can happen in the form of TOC or further substantive procedures. What if the fraud or no clap happens at the service organization at SO? What is your responsibility? And the fourth one, what is the reporting by user auditor? See, when your work is dependent on the third party, like even your puja is dependent on that priest, how do you communicate how you have done your work? So primarily this particular chapter is divided into 4. Okay, So if we want, we can change this. First paragraph point, no, obtain understanding, we can say identify and assess ROMM. How? By understanding the service and internal control. How? By going there. That's what we will see now. How do you get that understanding? So your first step may be to obtain an understanding, to identify and assess ROMM. So if you have already written obtain understanding, you please continue and say to identify and assess ROMM. Since already you have written obtain understanding of the service and the service organization, you write to identify and assess ROMM, then respond to the risk. What if the nuclear and fraud happens at the service organization, and what should be your reporting consideration? So these are all your objectives. So yeah, we will see this report only after we have gone through our chapter. Just stop.